Welcome, you guys, to one of our very first podcasts on our channel. Today, I was able to get one of our clients and my friend Edward Fay. He is working in the automotive industry, and this podcast is basically going to share with you all the secrets or most of the important things that you should know when purchasing an automobile, financing it, buying it, trading it, selling one. And I highly suggest you listen to this entire podcast because we're going to give some nuggets and some secrets that are not publicized online or anywhere. So go ahead and listen and leave a comment, share. If you're in the market to buy an automobile, finance one, this is the podcast you want to listen to. Okay, guys, enjoy. Okay, Edward, how's it going? Awesome to have you on the channel again.
Absolutely. I'm doing well. How are you?
I'm doing great. So I'm glad that you took the time out of your busy day. I know that you just pretty much wrapped up your work for the day, night, and yeah. By the way, guys, this call is dedicated for you. So basically, Edward is working in the automotive industry, got a lot of experience. And the reason why I wanted to bring him on board this channel is because I felt that the information that he has would definitely help our audience and viewers, because you have to understand, guys, I deal with lots of credit reports. I see what you guys buy. Maybe you don't really understand like how much I know about you guys that send your credit reports to my website. I know everything about you guys, and that's just due to experience. And you guys are getting effed, like nearly all the time. Some people aren't, but most of you guys are totally getting effed, and it's either due to either you're aware that you're getting effed or you have no choice but to do it. But I think it's I don't think I think it's mainly due to your guys' ignorance. And so this video, this podcast essentially, is going to help you and not make those same mistakes. So here's the thing. In regards to repairing your credit is one thing and rebuilding it is another. But it goes more than just removing blemishes or unpaid balances or collections or charge-off, inquiries, what have you. It has to do with micro and macro things. So how you apply for an auto loan and what you get and credit cards is a direct indicator of how easy you are being taken advantage of. And banks know this. Banks are going to look at your credit report and be like, oh, okay, he's a sucker. You know, I can take advantage of him. Oh, he's a sucker. And in the automotive industry, they may do the same. So there may be some myths, some fallacies, some questions that you may have. So in this video, we're going to try to tackle as much as possible. We have, I don't intend this call to be more than 20 minutes because I was able to get exactly 20 minutes from Edward. Anything else is just additional for this call. So this call is basically going to give you a bird's eye view of actually what's going on and how you should purchase a vehicle, ideally. So what I'm going to do is I'm going to go over two things: perception and perspective. Those are two things that we always have to be aware of when we're buying, when we're shopping, when we're just doing research. Do you have perception of something, of a market, of a product that you're trying to buy, or do you have perspective? So when you're buying a vehicle, you have what's called perception because your emotions are compelling you to get a car out of desperation or desire. Two Ds, double Ds, right? Desperation or desire, which are not to your advantage because you're basically driven by emotion. In the automotive industry, every industry, jewelry, real estate, cars, clothes, you want to buy that car because you're not really buying a car, you're buying an identity. And so a lot of people would make the mistake of getting a car and just overlook the fine print, which we're going to go into. So, Edward, so could you help explain those two things when it comes to buying a car, perception and perspective? And can you help us differentiate the two so we can give our audience some perspective on that?
Absolutely, and I'm going to speak to it as a salesperson because that's exactly what I am. So when it comes to perception, that's what the salesperson is going to latch onto when you walk on a car lot. I'm going to make myself an example here. I'm buying a Bronco myself, very much a desired purchase. I don't need it. I want it, right? And
which is
as
fair.
a salesperson,
fine.
Absolutely. Now, a salesperson is going to latch themselves onto the desire aspect. So the dealers already know what their numbers are. They already know how to make a car deal happen. Remember, this is what we do for a living. So they're going to latch themselves onto your desire. What are your favorite qualities? What are your favorite traits? Maybe the tech in a vehicle. And that's what they're going to focus on. They're going to try to get you, married, if you will, to that vehicle. Right, and then want it so much that you can't walk away from it. That's literally what I do day in and day out. So that's the perspective aspect. Now, perception, excuse me. The perspective, though, is at the end of the day, and I go into it with this mentality, and I think everyone should, you're still buying a depreciating asset. Whether it's new or used, it's already been depreciated and likely will depreciate more, and it will. Or, it hasn't yet, and it absolutely will as soon as you drive off the lot. So if you can go into it with non-emotional facts, as I like to call, you're going to save yourself a lot of time and trouble. That's the easiest way to explain it as far as a car dealer walking on a car lot.
That's a interpersonal issue that I'd say will be the most difficult because a lot of our own cognitive biases are going to override what we should do. And we'll begin to justify, oh, you know what, I can afford it, I need it, it's okay. So that's your guys' job, but I just wanted to give you guys a message that try to stop yourself in the buying process because it's a lot different when you're doing a Google search for automotive dealer York, Maine, or something like that, just as a random example. You're going to see a lot of cars, a lot of shiny objects. You're going to be overwhelmed. And from a psychological standpoint, you're at a huge disadvantage because once all these images start getting in your brain and your subconscious, you're going to get distracted. So I highly suggest that you buy a vehicle that you can afford, and if you decide to choose any vehicle, it should be through due research and try to negotiate for the best deal and just understand the disqualifiers, like red flags, things that you should be aware of, and learn how to negotiate. If you're buying anything and you're not negotiating, you're really, really missing out. You're not being a responsible shopper. I believe it's responsible to negotiate as best you can, and it's not being a haggler. It's not being a nuisance and just trying to get the best deal. And it's about understanding your opportunities to save money and do good business. So let's kind of unpack the perception part when buying a vehicle. So can you walk us through that, Edward? So are there any types of things that we should be aware of once we go to the dealership?
Yes, and the first thing that comes to mind, and I see this on a daily basis, day in and day out, is you have two different kind of buyers. Right? You have what's called a payment buyer or a payment shopper, or a rate buyer or a rate shopper. Same thing, just synonymous. The biggest mistake I see people being is a payment shopper. Well, I want the lowest payment available to me. That's fine and dandy. Car deals are redundant. So if you have the lowest payment because you stretch out your term, it comes with more interest. Not only a higher rate, okay, it comes with you pay more interest. So, and that's where a lot of people, that's where you're going to bind yourself up. And there's a second part of this I'm going to mention in a second, is the interest part. The actual rate itself is what you should be more concerned about, because a car depreciates. A new car will depreciate 20% simply by driving it off the lot. That's it, 20%. So it's without getting into the down payment aspect, now you have interest that you're paying on the loan. If you're financing, now you're upside down. And if vehicle's $50,000, it depreciates 20%. You're looking at, you're looking at like $40,000 that it's worth now, essentially, right? We're just doing simple math. Now you have interest that you're paying on top of that. That's kind of a bad deal to get into, if that makes any type of sense.
Yeah, absolutely. So it's best to not be fixated on the monthly payment, because that is not a good way to look at it. You should look at the whole lifetime of the loan amount, the vehicle type, and it's. I don't want to get into
I'll make it easy to explain for you. So I had a customer today that I sold a Jeep Grand Cherokee Altitude to. It's just a trim level, and so he was a payment shopper. He was also subprime credit. We went the mile to get him approved. I go over the contract with every single one of my clients, even before they. When
you say subprime credit, is that below 600? Or is it below 630, or is it below 550? What is subprime credit? What does a subprime credit profile have on their credit report?
It's not that linear in the car business, so it depends on the lender. So each lender has their own criteria. That's what makes the car business very unique. You might have, let's say, like Bank of America, which is a prime lender, like Tier 0, which is like damn near perfect credit. They're going to look at bad credit as, anywhere from 650, and under, maybe even 680 and under, because they like to stick with people who are, 720 and above. So it's not that linear, but generally speaking, we'll say the 650 and under is considered, bad credit.
Or what if they've never had an auto loan history before? Is that important?
A lot of times it's actually worse than having bad credit in the auto business. So it's because you have nothing established. So for instance, the gentleman I was just mentioning, and I will mention today, who I sold the Grand Cherokee to, he had, it was about a 540 score. It was pretty low. But we were able to get him approved because he had 2 good auto loans in the past that he paid perfectly on, with lenders that we actually have in our network. And because of that, and he has a positive relationship, we were able to get him approved. Now, if you take someone who has no credit and no established history at all, the banks are actually look at that more unfavorably. So 9 times out of 10, they require a significant amount of money down and or a cosigner.
Got it. Okay. So that's important. Me personally, I pay all my vehicles in cash, but that's not always recommended because it's not always feasible. So for me, that's my own personal situation. Everyone has their own personal situation, but essentially, if you're going to finance a vehicle, if you don't have adequate credit or automotive history, definitely going to, based upon what Edward said, it's going to significantly impact your interest rate, and because there's just not so much history. And it's also, I suppose, it's best, actually I do know this, stick to a finance company you have an existing relationship with, and we can go in about trade-ins and all that stuff later. Essentially, everything in credit is relationship, right? It's a relationship. So get in the mentality of relationship building with your dealer, with your salesman, with the banks that they use. This brings up another thing. Let's see here. Is it better to try to get financing with your own bank or the dealer? Or it's not a situation of better, it's just, is there, I think you've mentioned before that the dealers tend to mark up their rates a couple percentage points or basis points. Is that right?
Yes, and that's another scenario. Like, it's pretty safe to say with the car business, nothing's linear. It's so situational dependent. So if you have prime credit and you're able to get a rate from it, let's say your own credit union. Dealers hate credit unions, by the way, because they don't pay much on the finance side. So dealers hate using credit unions. But if you have great credit and you have a favorable rate from your credit union, it's one of those situations that you're better off going to the dealership. Oh, sorry, you're better off going to your credit union, excuse me. Now, that being said, the flip side is that there's also truth there. Dealers are trained. We are trained to make you look really good to the bank. So we want a bank to buy your loan at the end of the day. We want to present the application to a bank and for them to buy your loan. That's how we get paid. So if you have a negative history with certain banks, or you've had, let's say, a lot of inquiries or a special circumstance, one I deal with a lot is someone could be getting divorced and they have an open auto loan with their soon-to-be ex-spouse, and they're upside down in that auto loan. But being that they're getting divorced, we just need a letter from the bank, saying, hey, they're coming off of this auto loan, and then they're good. There's things as a dealership, if it's a little bit stickier of a situation, where we could communicate with our banks and actually do more for you than your own bank would be able to by itself, if that makes sense.
That's awesome. So dealerships have some good, I wouldn't say influence is not the good word, but they have ways to communicate with these underwriters, these banks that have discretion to approve you or not. So they can put a good word in, and that could be the difference of you getting approved for a loan or not. So that's awesome to keep in mind. I think that would be most applicable to my viewers, because I would say a disproportionate amount of my customer base are in sticky situations: divorce, bankruptcy, repos, you name it. So that leads me to another thing. So when you're going shopping, what is the best way to negotiate and getting a car when you first enter there? Because we talked about two categories, two types of shoppers. I want to delve in a little bit on how they're treated. So if I'm a cash buyer, am I treated different than a person that's financing? And how would a salesperson figure that out in the beginning? Should I tell them that I'm buying a car with cash in the beginning? Would that be beneficial? And if not, why?
Great question. So cash buyers are not treated favorably. And no, no one should tell a dealer how they are buying. And I'll give you the whys to both. So the reason a cash buyer is not treated favorably is because the dealer is not making any more money than what's at face value. They're not making any money in finance. They're not making any money, with any type of warranties. And we call it the box, which is the finance office. We know we're not making any money there. You just want the out-the-door price, and with tax, title fees, and doc. And that's doc fee is a dealer term. It's documentation fee. and then you just write a check and go about your day, right? So we know we are limited to the amount of money that we're going to make because you're a cash buyer and you're not going to be able to negotiate. If you say, hey, can you take a few bucks off? No, we're not when you're a cash buyer because we're limited to how much profit we have. And currently in this market, it's not a whole lot just because of what vehicles are costing at auction. And then the importance of not telling
You're a cash buyer,
anyone,
then go to auction then.
Yeah, there's public auctions that are not dealer auctions. I mean, those you got to be careful at auctions.
But you have a buddy that has a license at the auction. You could do that. That's another topic. But yeah, most people I have people that do that. Internet automotive auction, salvage vehicles. But that's not recommended. But that's kind of something that's more in my alley. I like to buy select vehicles, and the vehicles that I get are not always the latest models. So that goes, to show the difference between new vehicles and used vehicles. You probably are limited in the amount of ways you can finance a used vehicle. Is that correct?
Yeah, and there's a large spectrum on that. And this is where, I dealt with this today with the customer I was mentioning to you. So it was the Jeep I sold him and I'm just using a real life example so this can make sense to your viewers.
No problem.
It was a 2018 Jeep Grand Cherokee with 58,000 miles on it. There was one he was very interested in and preferred that actually had 100,000 miles, and it was still a 2018. Well, when you have something that used and higher mileage is actually more risky to a bank because of the amount of depreciation and the amount of issues that happen with higher miles on a vehicle. So you're a lot less likely to get financed. So that's the problem with used cars.
It's cut and dry. It's like black and white. So it's like, they're like, high risk, not going to be, and if they do approve it, it may not be the ideal financing terms, right?
Correct.
Because
ironically, this is what a lot of people don't realize, and it's simply because it's not publicly available, and that's why you have me on here. The best type of vehicle that a person can buy is a new vehicle. New. And there's a reason for that. One, newer vehicles are actually cheaper than used ones in some cases. I'll save that for another time. But for example, a new vehicle is new. There's no depreciation. It still has the manufacturer's warranty. It has its full value as far as the lender is concerned. So they know that their asset, because make no mistake about it, you're in a buying agreement. You're renting the car until they allow you to keep it and pay it off. The lender knows their asset is secured on a brand new vehicle, where if you have a used one, it gets more dicey.
Makes perfect sense. So in terms of financing, new is the way to go. It's just a lot less risk. There's more room to negotiate, and it's a new vehicle. New vehicles are great. Me, I cannot compare. I cannot suggest that anyone do the things that I do. And nor are we suggesting anyone do anything. That's for your guys as adults to do your homework, understand what your needs are, what type of vehicle that you really want, because a vehicle is a want. It's not a need in the sense, unless you have a truck driver. There's public transportation, there's bus routes. A lot of people, there's Uber. You don't need a car in 2023.
Well, if it helps, I'm going to give you an example of how I chose to buy the car I'm buying. So, and this will go off of the needs aspect that you're talking about, the wants, which will actually help your buyers a lot. And this is coming from someone in the industry, and I'm about to expose something super, super potent. So the add-ons are what kill people, not literally, but in a car deal. So they like all the nannies, right? So they like all the tech packages, all the super big screens that are the size of an iPad that you're never going to look at, right? Because you're driving on the road. You're not looking at your screen. It's a nice thing to have. You don't need it. That's how, as a salesperson in the car business, cars are not that exciting to me anymore because of this. But I look at the bare bones minimum of what I need the vehicle for. That's getting to point A to point B. All of the other nannies, if you will, that either dealers add or you can get from the manufacturer, for instance, can cost anywhere from $2,000 to $5,000. That's getting wrapped up in financing, and now you're paying interest on one-time upgrade over the period of, let's say, 5 years. You are quite literally screwing yourself financially, unless you could support that.
Yeah, and if you have that money to begin with, just buy cash, and get a customized, Jeep or something, and you know what I mean? So you're essentially getting all those bells and whistles. You're paying for the bragging rights for someone that may be impressed by, you got a fully loaded vehicle, you got the special package, the sport pack, all that stuff. I guess it's somewhat relevant to most people. Most people don't need that type of stuff. So a lot of the people that I get as clients, I see, Mercedes-Benz, BMW, this, that, repo, even myself included. I made mistakes too. I had BMWs, Mercedes, those are kind of all the cars I've driven. And yeah, I mean, I've been there, done that. But I remember when I first got my first BMW, man, I got all those bells and whistles. And there was a big smile on the salesperson's face, the finance manager's face. But hey, I was young. I was like 21. I had my first BMW, and 2021's around there. Been a while. And I was like, I kind of fell for that mentality. I was like, I'm my own worst enemy. I said, you know what? I want a BMW. I don't know if anyone else can get me approved for one. So I'm just going to take what he has to offer, because I didn't have any prior car automotive history, and I was young. But I was making well above six figures, maybe like $300,000 a year. But I just wanted a BMW, but I didn't have $50K, $60K, $70K to buy one. So I was like, okay, well, let's just do this. And yeah, I got all those warranties and stuff. I remember at the end there was a last part where I went to the guy's desk, and there was like all these boxes, and it was just checking them. And yeah, totally got raped, or just bought things that I don't need. So that's another thing, guys. Not recommended at all. Not recommended.
But when it comes to warranties, Andre, too, and for your viewers to know this, so the warranties dealers sell at the dealerships, they are considered just pure profit, minus the administrative cost to it. And the general rule of thumb is 50% of the cost of the warranty. So if they're selling you one that's $3,000, it's powertrain, bumper to bumper, covers everything. That's fine and dandy, but it costs them $1,500 to administer. So they have $1,500 in profit. Now, you're financing, right, a one-time payment because it's a warranty. That's it. But now you're financing $3,000 over 60 months on top of your vehicle purchase. It leads to you being upside down and owing more than it's worth very quickly. Credit unions are a great resource. I always recommend someone go to a credit union, or at least have a basic relationship with one. Mine in particular actually sells a full bumper-to-bumper and powertrain warranty, much longer and much better than any dealership one, for $499 as a one-time payment. That is it, not $3,000. And you could purchase that out of pocket. It's good for as long as it's good for. Saves you a ton of money.
Yeah, guys, go on a field trip. Talk to some local credit unions. Local credit unions are the foundation for building credit, because those are the guys that are the underdog that are going to help you grow. And even for refinance, usually local credit unions are really good with that. So you can use them to refinance later and stuff, and this and that and this and that. And if you're already an existing customer with them, that will help you get other products and services you may want to get from them, such as secured credit cards, unsecured credit cards, installment loans, stuff like that. So a warranty is kind of useless for a new car.
Yeah, you have the manufacturer's warranty, and so I'm a Ford guy. I work at a Ford store, so I know Ford's products. Generally, the American brands are pretty similar across the board with the manufacturer's warranties. So there's a bumper-to-bumper, which is exactly what it sounds like. Covers bumper-to-bumper, everything. Ford is 3 years, 36,000 miles, whichever comes first. And then there's a powertrain, which is, think of the big stuff, engine, transmission, etc. 5 years, 60,000 miles, whichever comes first. So this is where, a buyer could educate themselves and really understand, how they could save themselves some money. If you come to the realization that your finance terms are going to be, let's say 36 months, so like roughly 3 years, okay, and you'll have the car paid off by then. As long as it's 3 years, 36 months, etc., you're fine. You're still covered under the manufacturer warranty for the life of your loan. There is absolutely zero reason why you need a warranty anywhere else. Zero. Now, if you keep it above that, so let's say 4 years to 5 years, and you want the extra protection, that's an entirely different conversation. I'm not on this call to sell anyone a warranty, but just go into it as, I like to call it non-emotional facts, that are presented to you, and just hammer on that. That's going to save someone so much money. It's very hard to do in a dealership setting.
Yeah, so for those of you guys listening that are in the market for buying a new vehicle or in the upcoming, I would just save you a few $1,000s. You can pay it forward if you have credit issues and you want to say thank you. That's a great way. Edward's actually an affiliate of Pinnacle Credit Repair and actually an existing client. So a common currency with Pinnacle Credit is that we do take on affiliates, and the more the merrier. So this is a great opportunity to pay it back to Edward. We want, not required. There'll be an affiliate link in the description. I just want to be transparent with that. But in this conversation, we just want to keep it transparent as much as possible and provide as much value to you and, not cutting any corners. The purpose of this podcast was to give you access to information that's generally not publicized. Another thing I want to touch upon, some people swear by the Blue Book when they're shopping around. It's like their Bible. What do you think about this Blue Book? Is it the Bible? Is it the buying Bible, the sales Bible in the automotive industry? Is it worth anything? Is it worth its weight in gold? That's what I'm trying to ask.
It's for the consumer, it's useless, and I'll explain why. So there's a huge company out there called Cox Automotive, COX. They're one of the biggest conglomerates in the industry. They own most of the auction companies. They own Kelley Blue Book. They own Edmunds, the consumer, guides, if you will. They also own the databases and stats where they come from, the dealers use, which is, Black Book for subprime traditionally. And then you have Manheim, which is also an auction house. Those are the numbers dealers go off of, the non-public information of the consumer. So Blue Book and Edmunds is... Can your typical consumer get access to Black Books or Manheim, or is that just not accessible? Okay, great. So it's important to pay attention and try to listen to the podcasts like this because, again, you cannot get access to certain numbers and statistics and pricing without having good relationships with people such as, Edward and, myself. So be sure to leave a comment if you have any questions about anything that we said or any suggestions. If you guys want to hear more of, this type of dialogue, which we will have in the future, and I intend to have Edward on more, where we would discuss, we will provide you helpful information
to help aid you in the buying process of, of vehicles and stuff like that. So yeah, so the Blue Book is pretty much useless.
It is. I mean, it's completely useless. And adding on to that too, just to help your, viewers understand how, we as a dealer and a salesperson, assess a car deal. This is applicable to used cars, not really new cars, but it is helpful nonetheless. So there is a term, does a dealer own the vehicle right? So what I mean by that is, my store actually made this big mistake. Our inventory team bought a bunch of EVs, and then the market dropped. So the Ford Lightning, for instance, we bought 7 of them, and next thing you know, Ford cut the cost of new ones by 10 grand. Well, now all of a sudden we went from owning it under, the retail value. So we were able to make a profit. And then pretty much overnight when Ford cut their costs, okay, now we own it for over what the retail rate is. So now we're losing money on it like that. Those are terrible vehicles, to apply for on financing, for the simple fact that the lender is going to see that and say, hey, they're selling this, above, they bought it, at what it's retailing for. So I'm not going to lend as the lender to that kind of a vehicle. So this is non-public information. The dealer has to own the vehicle right at the end of the day. So if they procure it for less than it retails, then you're in a good position. But a lot of times in this market, what's happening, and it's actually, I don't recommend buying a car in this market, is dealers are owning the vehicles for far more money than they should have paid for them. And that's why you see used vehicle prices actually being more than new vehicle prices. It's pretty absurd.
But the financing for used vehicles is not the best route to go, right? Or is that relative?
It's kind of relative. So, there's an abundance of financing for used vehicles. Make no mistake about it. The interest rates are higher. The terms are not as favorable. So the average interest rate right now for a used vehicle, and this is just average, so this is taking all types of credit into consideration, is 11%. The average new rate that we're seeing in the industry, again, nationwide, all types of credit accounted for, is 6.25%. So new vehicles the way to go there.
Yeah, huge difference. It's like double.
And a lot of manufacturers, just so you know, Andre, a lot of manufacturers have their own banks. So like ours is called Ford Motor Credit Company, or FMCC. So this is also favorable financing terms for new vehicles. So the manufacturer itself, especially if you meet their credit requirements, and Ford is usually very lenient with credit. And General Motors is another one. GM Financial is another one that helps, and Chrysler Financial. Those 3 right there are really good to people who don't have great credit, known to be at least. But you get more favorable financing if you finance with the manufacturer's bank. So, for instance, right now, for a Bronco Sport, and I know this because I did this recently, there's 2.9%, and Ford is subsidizing the interest rate. So if you get approved at 6%, Ford is actually subsidizing about 3.9% of that interest rate. So now your interest that you're paying is only 2.9. You're only going to get that through the manufacturer. It's another reason why buying a new car is so much more favorable.
Yeah. I've seen interest rates for auto loans on USAA as low as 1.99.
Yep. They're amazing. They don't do indirect lending, though, so you'll never find a dealership that has USAA.
Yeah. So that comes to ask, where would you get a car that would do that, that they would buy? That you would buy with that?
Such as like a 1.9% rate?
Yes.
there's not going to be a single indirect lending bank that a dealer has that has a 1.9% rate. There's just not a single one currently. I mean, if there is, I want to know about it, and I want to go work at that store because I'll be selling a lot more cars than I do right now. But it just doesn't exist in the indirect lending market, and the indirect lending is relationships that dealer has with banks. Direct lending is you go into your own bank.
Okay, guys. So if you know of any sources, Edward may have a new job pretty soon. So, yeah, just kidding, joking. All right. So let's see what else should we what else have we talked about? We talked about.
We did mention how dealers tack payments and kind of get people on that, so how they kind of lie by omission on worksheets. If you remember talking about that.
Yeah, what about EVs? Is there anything that we should know about electric vehicles?
That's a loaded question, man.
Yeah,
I wouldn't buy them, honestly. So, I have nothing against them personally. I drove one the other day, ironically, quite a distance too, for several hours. It was a fun vehicle to drive in. It's such new technology, and there's a lot of advancements that need to get done. One of those big things too, that's an advertising standpoint, that dealers will advertise, but then tell you that they can't talk about, is the tax credits. So if any one of us in a car dealership, myself included, were smart enough to be an accountant, we wouldn't be working as a used car salesman. It's a joke.
Yeah.
So we could not answer tax credit questions. It's an absolute useless thing to do, to buy a $30,000, $50,000 plus vehicle simply because of a tax credit. It's actually designed specifically to dissuade people from that, and you have to sign an affidavit as a customer, and we have to sign it as a dealer, saying that we are not selling you the vehicle for the sole purpose of a tax credit, and you are also not buying it for the sole purpose of a tax credit. There's income limitations to it. There's so many loopholes, if you will, where you don't qualify for a tax credit. It's not a worthy pursuit to buy EV just because of a cool tax credit.
Got it. Trading vehicles in. Is there anything that comes to mind as far as if any one of our audience is considering trading a vehicle? Could you give us maybe some common scenarios or some frequent asked questions?
Yes. And so this is a two-pronged answer, and it's kind of helpful what you said too, for the mentality to buy a car as well. No deal is better than a bad deal at the end of the day. It is no different with the trade. So when coming into a dealership, we want to be able to, this is assuming you aren't upside down, meaning you don't owe more than it's worth. You have good equity in it. So we want to be able to acquire your vehicle for as little money as possible, because when we go to sell it, we'll make more money. So a lot of times the number that the dealer is giving you is not actually their bottom line. They're usually, it's called holdback, holding back trade value. They're usually holding back $1,000 or even $2,000, because they know that you're going to want more money for your trade. So they know if they could hold a bunch of that money back and not tell you about it, again, it's a matter of profit. It's not a dirty word. That's a huge thing right there. So the best way to combat that, Andre, is for someone to first develop the mind frame of just walking away from a car dealer. So when you want to get good trade values, remember us dealers, we use non-public information that the general public doesn't have access to. So I'd recommend going to several different car dealerships. Let's say you have a Ford, for instance. I'm just going to use this as an example. Go to several different Ford dealerships, because the brand store, so like a Ford store, is always going to pay more for your car than anywhere else. So if you go to 3 Ford stores, get 3 trade-in quotes, you are getting they are basing that information off of non-public stuff that dealers have access to. You take these 3 quotes, and let's say now you got these 3 quotes. Now you are ready to buy. I got my ammunition, or your viewers do. Now I'm going into the dealer. You bring the quotes with you from a Ford store, because we could actually check in our own internal systems the other Ford stores, what they actually offered you. So when you go into that 3rd Ford store now, okay, you're ready to buy your car, you have ammunition that the other dealers gave you, okay, for free, mind you, to negotiate the best for your trade.
But that is still not going to be, it's most likely not going to be as much as you could possibly get if you go to Craigslist. And then we have the car buyer learning how to become a car salesman. So that's actually, sometimes buying a vehicle, you're going to have to learn, I guess, how to sell a vehicle if you're trying to trade one in, because if you want to trade it in with the dealer, you're not going to get as much profit from it. You're not going to save as much money. So
no, and you should go to CarMax too, is another one. And if any one of my coworkers heard me say that, they'd have my head on a platter. We hate CarMax, Andre. We hate CarMax. We hate Carvana at our dealerships because they offer so much more money for trades than we offer. Again, they're huge conglomerates, the way CarMax, for instance, and this is going to benefit your viewers, does things, is they pay far much more money than they should for trades. But they also, turn, 20,000 vehicles a month, if not more. Actually, a lot more than that. So 20,000 vehicles, let's say on a 2 to 3% profit margin, is going to be a lot more than my store, which does 30 vehicles on the margins we have. So they could literally afford to offer you more money. So if your viewers want to take the extra time and inconvenience to go get a quote from CarMax and even sell CarMax their car, they will undoubtedly get more money than any dealership will give them, without a hint of a doubt.
So that's your go-to, guys. CarMax, Carvana, if you're going to trade in your vehicle, or Craigslist, which I feel perhaps Craigslist would potentially be more than even CarMax or Carvana. However, Craigslist, it's kind of an indefinite amount of time as far as you're going to sell, because you have to post ads, you have to do that. Carvana, CarMax, they're in the business of buying a vehicle, so you're going to get a straight answer and a quick answer from them. So I know that maybe a lot of people just want to get a new car and just get this car off their hands, and they're not looking to make profit. But if you're in the sense of urgency to buy a vehicle based upon want, then yeah, Carvana, CarMax is your go-to. Then trade in.
I actually just helped my buddy. I sold my buddy a GT500 the other day, and I actually told him I went to CarMax with him to get a trade value, because I was just curious now at that point. I offered him, when I did an appraisal for his, so he bought a 2022 GT500. He had a 2019. I offered him $60,000. CarMax offered him $80,000, literally $20,000 more than I did. He sold CarMax his 2019 GT500, paid off, took the cash, and put $80,000 down on a 2022 we were selling for nearly $100,000. So that alone put him in a buying position that was far superior. So I'd recommend your viewers sell their car separately to CarMax, take the money they get, then go to a dealership, because they'll have so much more of it.
And you don't have to. You don't have to just finance a vehicle and not have money. That you can have $20,000, $30,000 in cash, put it down towards the vehicle, and then get the financing terms in a much favorable outcome versus not having any cash down, right?
Yeah, that's probably the second or third biggest mistake that I see every day doing car deals. Is there's this fallacy, if you will, and it's kind of mean to put it that way, but it's true, is I want to put as little money down as possible. it just comes back to this, full circle. You are buying a depreciating asset, and you're going to pay interest on a depreciating asset. It's almost counterintuitive in nature. So having money down, yes, dealers like us, we will absolutely turn that into profit for ourselves. There's no question about it. But as far as a buyer, putting money down, let's say, 10% on a used car because it's already depreciated, 20% in a new car, that virtually ensures that you're never going to be upside down in that car, and you're always going to have a good equity position. It's a large commitment to make. Maybe you got to wait to save up that money. In the long run, you will be happy that you did it, because that way, if you ever want to trade it in, you're going to avoid so much BS down the road. So money down, or people not wanting to put money down, is probably the second biggest mistake I see in the dealership every day.
Yeah, and you guys got repossessions for a reason. Think about that. I don't know the reason. There's too many to count. However, it's usually because if you're fine, you can't afford it. Well, so money down is obviously going. So if I want to get a $60,000 vehicle right now, and I said, hey, I'm going to give you 30, I'd get a better interest rate, correct?
Oh, no question about it. And there's also another part of that.
And first credit is a factor in that. Assuming that let's just say I was, 650, and I wanted to get a $60,000 vehicle. I have $30,000 cash. I gave you that cash. We did some paperwork. What are the numbers most likely going to look like? You said 6 points, and said that was a new vehicle. You said the interest rate is typically 6%, and 6 and some change.
Yes, and legally speaking, and even though I'm not at work right now, job security is a pretty important thing, so I'm still going to be honest. The general rule of thumb, the more money you put down, the lower the interest rate. And that's simply because you're reducing the lender's risk. And a lot of people will...
You're saving money, guys. You're saving money.
100%.
You're saving money on a depreciating asset. So don't think just because you're financing, you can't pay for half of it or 30% of it. And you might think, well, I don't want to cough up that money, but you're going to cough up that money sooner or later, and more than you think. So I'm always an advocate in terms of cars. I know that they're an appreciating asset. So for me, I'm going to do cash. However, if I want to build my credit history and I have some reserves and I can afford it, by the way, getting a car is not the best way to build your credit, guys. You shouldn't get a car for the sake of building your credit. That's dumb as fuck. So on your, and it's misleading because a car is an appreciating asset. It is an asset when you own it outright, and it's considered the legal term tax asset is because you can actually get some value of it. How much value you get is going to be that black book thing that everyone was talking about, and all the banks know black book, so they're going to value that car based upon the black book value, right? And then they're going to appraise it for that and say, oh, okay, So you want to make sure that you have damage control. Buying a car is going to damage you financially, inevitably, unless you're lucky. And luck does happen. But let me tell you how to get lucky on buying a deal. You find some old guy that has a nice car in the garage that's rich, that has plenty of cars, and doesn't even care about this car, and you become his friend, and he gives you a deal. The likelihood of that happening is very slim to none. It's happened, but, these serendipitous moments where you find deals like in such in real estate, you got to, spend a lot of time, effort, and, to do those. So it's kind of not really feasible for most people, but at the end of the day, damage control. Buying a car is going to damage you financially. It's not recommended unless most of us, I guess, kind of need one. Technically, if you live in a big metropolitan, if you have a family, you need a car. I guess a lot of people have families here, then yeah, you got to transport your kids and keep them safe. But if you're a single man, such as myself, or a single woman, and don't have any kids, A car is kind of considered a luxury. Me, I work at home, and all my things that I need are around my home. And if you live in a place like New York, you have public transportation. If you live in a place like San Francisco, you could walk everywhere. It's in a 6-mile radius. A lot of you guys are overweight. Anyways, get your steps in. 25,000 steps a day is what you need. At least 6 miles a day. So
one thing I
save
want
money.
to do, Andre, really quickly with you is I want to explain how interest is compounded on a car loan, because it's not what most people think, and that way your viewers can better understand exactly what they're getting into. It's one thing for me to sit here and say, hey, you're paying interest on a depreciating asset. Everyone knows this, right? But
you're paying
I want to kind of illustrate
that percentage rate a month. It's not for the total amount. Like if you take a $60,000 vehicle and you calculate with 6% interest, you're not paying that amount. You're paying 6% interest for the amount that you'll owe every month. So you times that times the months of the term of the loan, right? So
no, actually, it gets a lot dirtier than that, and this is where I kind of myself.
Worse.
So
that's the term compound interest. Compound interest is, yeah, that's why. Okay, so go ahead and explain if you don't mind.
Absolutely. So, and this is what it's not simple at the end of the day. I mean, it's simple once you understand it. So, for instance, as far as the way a deal is structured, right? So once that you're approved with the lender, I'm going to use the guy I sold today as an example. So he financed the Jeep Grand Cherokee. It came out to, rounding for the sake of even numbers, $28,000. Okay, the interest is already included in the amortization of the loan. That's just a calculation of interest over the term of the loan. So his rate was pretty high. It was 17%. And that's because the guy didn't have any money down, didn't want to put any money down. It is what it is. I'm not here to judge people. I'm here to articulate the facts. 17%, right, on $28,000. So that comes to, let's see here, $4,760. Now that's, that first year of that auto loan. And just interest payments. Now his payment was $619 a month. Okay, so we're going to divide that $4,760 in interest that he's paying that year by 12. That comes out to $396.66. So his payment was $619, and then we minus the $396.96. So over 50% of his payment is actually going to interest every single month. That's how crazy this gets, Andre. Most people think that 17% is 17%. That 17% interest rate equated to about 65% of his total monthly payment. It's absolutely insane.
I heard some guy said he paid I guess I want to know, YouTube, something popped up. This bad guy, he said that he was paying 0% interest on I think it was like a Silverado or something. 0% interest. What does that mean? Like, is that real?
No.
Oh, so he was lying. Okay, I got it. Okay, great. Doesn't.
So 0% interest is you could put anything on a contract, and call it what it is, because it's a contract. There's you can have a pie and slice it in squares, but it's still a pie, piece of the pie. What you're trying to say? Yeah, I mean, like, take a pizza.
If I have a pie cut it into 12 pieces, does that mean I have more pie? Because I have more pieces, it means 1, 2, 3. Oh, okay. All right. I've been misinformed. People have been misinformed. Okay. Just wanted to make sure. A pie is still a pie. So, ladies and gentlemen, in case you guys don't know, if you have a pie or pizza pie, if you buy it and it's cut into 6 slices, if you cut it into 12, you're not getting more pizza. Just in case you guys may think that that's wrong. Just as you don't get not 0% interest. Why would someone, can you give us an example where in a contract, if you've seen that, where they could say 0% interest or like 0.1 or 1% or 2% interest, something that's like just crazy?
Yeah, so that's with the lending from the manufacturer. So and I didn't mean to interrupt you before. My cell reception was a little poor, so I apologize. The manufacturer's lender, so like for GM, right? Because GM is Chevy's GM, General Motors. So GM Financial will offer rates like that. I mean, I could tell you right now without a hint of a doubt, that is not currently what GM is offering. I don't even work at a GM store. That's just not where the feds have set the rates. So that's not a thing. Now, I have seen 0%. I've actually, here's the trick, Andre. So I've actually financed at 0% before in my life. Here's the trick, though, and this is where they get you all messed up. And 0% is actually not as great as what whoever this individual that you're talking about made it out to be. So 0%, financing, yes, it does exist, but it exists for, 24 to 36 month, terms. So let's take a $30,000 vehicle, and it's just straight, principal payments. $36,000 vehicle, and you're dividing it by 36 months. That's $1,000 a month for a truck. That is ridiculous. So that 0% interest that, this guy was talking about, well, it absolutely means
it's
nothing.
Relative. It's just masked. It's just masked. It's a great selling point, though. But it's just structured.
There's contracts I deal with every single day when I sell new cars where someone's like, oh, I love that 1% interest. Great, Mr. Customer. That's 1% interest on your $36,000, $46,000, $56,000 vehicle. That's for 36 months, 0 interest. And then when they find out the payment's going to be $1,500 a month, they're like, oh, no, I don't want to do that. I don't blame them. I wouldn't want to do that either. So it's all relative. It's a lie that if you're only talking about 0% interest, and it actually makes me very upset as a car dealer because it gives us a very bad name in the industry.
Yeah. It's not telling the full truth, but it's a selling point essentially. That's it. Because
if someone's going to have a $1,500 car payment, they're an idiot. I mean, pardon me for being too blunt.
Yeah, might as well. Yeah, well, people
go buy a house.
Buy a house. Yeah, that person might have the car is more expensive than their house. Yeah, it's interesting. Anyway, yeah. So we talked about a lot of things here. Are there any other things that just people need to know when they're buying a vehicle? Anything that comes up to your mind? Because I know that we spent, this was supposed to be 20 minutes. So guys, thank Edward for, it's been 4 times the amount of time that we agreed for this podcast here, but it's all for you guys. So make sure to watch the whole thing. Is there anything else that you want to touch upon?
Yes, and I'm very passionate about helping truly, people get the best car deal as possible because I've seen, how bad it could actually get for people, and I want to be a positive inspiration to someone who's buying a car, so doesn't have to suck. But yes, the big thing, and this is just the biggest thing any one of your viewers can do, is understand that no deal.
The money you save your customer, the money you save your customer today is the commission you make from their repeat business tomorrow.
Yep. Exactly.
Okay. So I'm sorry. I just had to add that in. So we were saying.
Oh, you're good, man. No worries. But that's absolutely true. I'm a relationship building guy. I do things for the long term, and I plan to have a book of business. But that being said, the best piece of advice, this is also not just applicable to car dealerships, it's very applicable to car dealerships, is no deal is better than a bad deal. And here's what I mean by that. If you are going off impulse, like, oh, I love this car so much, I'm going to love the way it looks in my driveway, especially us guys, I'm no different, Andre. I'm going to get all the girls, right, because I have a really nice car. They don't care at the end of the day. And if you get a bad deal on that car, okay, now you're stuck with it for multiple years. You're going to feel terrible about yourself. Maybe it's a representation of the dealer. Maybe it's not. I would love for your viewers to understand that no deal is oftentimes better than a bad deal. Just walk away, save yourself the hassle. You don't lock yourself into, a long-term commitment that could possibly be bad for you. We have a saying in the car business, Andre, there's an ass for every seat. Pardon me for using an expletive. So if you walk out of that dealership as a customer, yes, I care because I didn't sell you a car, but there's going to be someone else coming in, probably that day. So, and I'm just going to sell it to them. So it's sweat off my back, to say the least, as a car salesman. So I really want your viewers to understand that. Just walk away. If you get a bad feeling, if you're not feeling good about it, if you're feeling nervous, you feel like you shouldn't do it, walk out. Doesn't matter what the dealer says. You're legally able to walk out and do it. It will save you so much heartache in the long run. That's the best piece of advice.
You're not going to hurt anyone's feelings.
No.
So don't worry about that. There's an ask for every seat, and there's always going to be someone coming on that lot. So no one's taking it personal here. I have a saying: you don't get what you deserve, you get what you negotiate. So guys, in all your business dealings, whether they're getting an apartment, whether they're getting a real estate installment loan or automotive loan, if you're not negotiating and you've listened to this podcast, blame yourself. And another thing is that I lost my train of thought. Hold on, it'll come back to me. I totally forgot it. Who cares? Okay, forget it. So yeah, you don't get what you deserve. You get what you negotiate. So always do your homework. And you guys can listen to this podcast over and over again, because it might, like me, when I listen to podcasts, I get the most benefit when I listen to them in the morning, and I put it on repeat. Just like you go to school, you may hear something goes in one ear, go out the other. But in order to register information to long-term memory, because you might not buy a car today, but assuming you buy it tomorrow or next month or next year, perhaps this information can definitely help you. And guys, if you got value out of this podcast, like, share, leave a comment. If you have any questions or just want to share your buying experience, where I'm interested to hearing your guys' buying experience. All of you guys that watch my channel, if you viewed this, even for like 2 minutes, please leave a comment. Good, bad, all around, doesn't matter. I'm really interested to understanding your guys' unique experiences when buying a car, or maybe tell us what car you have. Send a picture, or if you're a car salesman or a finance manager, drop a comment. We would appreciate it. Or if anything, if you guys want some clarification, if any of this information you feel is inaccurate or not true, leave a comment and we can debate. We can talk about it. So again, we just wanted to have this podcast here and bring Edward on. He is a active client of Pinnacle Credit Repair and an affiliate, because he's already seen results. And here at Pinnacle, we're trying to create a culture and pay it forward. So if you're a client and you have paid for our credit repair services, why not share it with a family or a friend and make some commissions here? Like I said, profit is not a dirty word, like Edward said. We are a professional service and business. However, we want to build this company and expand it and just share the wealth. And there's an affiliate link that's a great, I don't know any other better way to say thank you than supporting Edward and our business here, but it's not required. It's not required. We'll still answer your questions, anything of the sort. Our main intention here was...
One thing I'll do for your clients too is if they want to send you, if they're comfortable sending you a contract that they get from a dealer. So dealers will absolutely give you the contract, or they could take a picture of it and send it to you. And they want me to review it to make sure they're not getting screwed, because I know where to look at all these little nuances to see where they could be doing some shady stuff. If your viewers want me to do that, I will absolutely do that. It doesn't take long. It'll take me about 10 seconds to, exploit anything that doesn't look right. I'll review your viewers' contracts if they want before they sign them.
Yeah, sure. Would you like to leave your email address, or you know what I'll do is this. There's a link in the description below, guys. It will have Edward's contact information. That will be the only way you'll be able to get a hold of him, unless you, message on his channel. I guess he maybe has some videos there, but I'll leave a link in the description. It'll come to my website. It'll have his information and all the information that we discussed in this video in written format. So I know maybe you guys can't listen to the full podcast. Well, it will be in written format. I have an article already on our website, which will have Edward's information. You can reach out to him, and any questions, concerns, you can deal with him. And also, be sure to check out our website. The link in our description below will be to our blog pertaining to this topic here in automotive financing and buying and purchasing and trading. But feel free to check out our further topics in finance and credit. Guys, really, really think about this for a moment. The car is a depreciating asset. It is a liability in the sense that you lose money the day you drive it off the lot. It's losing money. So it's not building your wealth. Unless it's a business, you have a truck, I get it. We'll talk about those things later on. We have a lot of customers that are, a lot of viewers that are business owners. So we'll talk about that later for the sake of time. So guys, thank you for tuning in, and I'll see you on the next one.